start with a question from a viewer, Michelle. It's on Home Capital Group. But before we get to the question, I want to bring you some updated information on Home Capital Group's liquidity, which of course has been a big key focus for investors over the last few weeks. We did get an update from the company. As of May 22nd, there was high interest savings accounts, $115 million, steady from May 19th. So it appears as though the depositors aren't fleeing to the degree that they were in the past. So the question from Michelle is, Home Capital Group is a stock in trouble. What are your thoughts, David?
Right. So there's a difference between whether a company is an ongoing concern and whether it's something you want to invest your money in now. And look, I can only speak from my point of view. I try to buy things that are good getting better, where we can see, based on the numbers, things are doing well to begin with, but where we can see positive change that can cause people to revalue to a higher level. And when you have things like a CEO being fired and an OSC investigation, these are open-ended issues, right? And you get credit downgraded, potential for further downgrade. When these things begin, you just don't know where they're going to go. And so unless you are a dyed-in-the-wool value investor and you can take the company apart and say, what is it really worth? And I'm comfortable sitting and waiting for the market to recognize that I'm right. This is a tough thing to be a purchaser of. So, you know, we've been in a pretty good market. There's lots of great companies to buy. You need 20 to 40 to make a great portfolio. I'm just not sure you need to take on that uncertainty when there's so many questions around.
How do you think this ends for Home Capital?
You know, ultimately, it's possible the company gets bought in pieces or in whole by somebody else, and that's a possibly good outcome. But I think there's a lot of question marks, and I don't like to take a lot of risk. I like to have the odds stacked in my favor, and so I would just prefer to do something else.
All right, sticking with financials, we have a question from Cliff in Barrie. Go ahead, Cliff.
Dave, I'd like you to tell me which of these two you would favor, Brookfield Infrastructure or Bank of Nova Scotia. I'm thinking in terms of growth. I have no fear as far as sustainability of dividend for either one of them is concerned, but I'm looking at growth. Thanks very much.
Okay. So let me start by saying, you know, financials have been a group that we've been in favor of for some time. I've said for probably 18 months now, I prefer U.S. financials to Canadian financials. And listen, all banks will benefit if we wind up in a rate rise cycle. But maybe the Canadian bank's a little bit less likely than U.S. If I had to buy one of those two right now, I'd probably take a look at Brookfield Infrastructure. I think that it's an interesting collection of assets. It might underperform sort of global markets because it's a more defensive play. But as far as a yield play, I think it's kind of attractive, and it doesn't have any of the current concerns hanging over the Canadian banks, which may be a slowdown of the real estate market. For Bank of Nova Scotia, of course, you've got some difficulty in some of the South American markets, and they've got exposure to South America. I prefer, if I'm going to buy a bank, to buy a U.S. bank currently.
How seriously do you take the concerns about the housing market for the banks?
I think it is. You take it with a grain of salt. The Canadian banks are amazing in their ability to manage an issue
Very
for
resilient.
a long time. So I don't want to say that I think that there's a big problem. I just think as a global investor, people have a choice as to where to put their money. Canada was a great place to be in the banking system for a long time, but we're seeing an acceleration in the dividends paid and capital return in the U.S. banks right now, and you won't see that in the Canadian banks. All
right, let's go to the phone lines again, where Henry is standing by in Hamilton. Go ahead, Henry.
Good evening. Might I please have a description and an evaluation of Salesforce.com? And second, is this one of those companies with a multiple up in nosebleed country, or perhaps on the basis of growth, I guess the PEG, the PEG ratio, it's still a reasonably priced security?
Right.
Your opinion, please.
Okay, so in the market that we're in, there are several key multi-year themes that are at play. In a bull market, you will tend to have a number of industries that have some structural shift taking place that benefit certain industries for a long period of time. And Salesforce is right in the middle of one of them. and it's cloud-based software or software as a service. And this is a really unique area because when you're getting subscribers and new customers, this is recurring revenue, just keeps on going and it builds on itself. It tends to be you get a customer and they buy one suite of products and then they start tacking on additional products and services, which just only adds to profitability. So your question, is it an expensive stock? Absolutely. It's about 80 times this year's earnings. Right? Now, having said that, this is a company that's growing at 30% a year. So it's growing very rapidly, and it tends to be that the estimates are constantly being revised higher. So maybe it's not 30%, maybe it's 40% that it grows, and then a bunch of it drops to the bottom line. So we really like the software as a service and cloud-based software sector. We don't own Salesforce right now. We own several other companies in the space. But the sector is in favor. The company has consistently been beating estimates. The estimates are going higher. Understand there's always risk in a higher multiple company, but the best companies always trade at high valuations.
Mm-hmm. How sticky are those customers? For example, are they inclined to shop around? I mean, there is more competition in this space.
Once a corporation ties their way into Salesforce and customizes it and builds out all the reporting that they want to be able to use to get the most out of it, it's very hard for them to leave, and it's very unlikely. Okay. The deployment of Salesforce versus other enterprise software happens very quickly, and there's a reason why this is a $60 billion company today.
All right, we're going to have to take a break, but we'll be right back with David Burrows. He's President and Chief Investment Strategist at Barometer Capital Management, taking your questions on North American large caps. Get in touch.